Powell Speaks at 2 p.m. So if you are trading, this is, I know a lot of you guys are going to say, well, that's for USD. I know you can't see my screen, but I'm not sharing it right now.
I expect more of you to log in.
Yep,
There's about
exactly.
4 of you. There's about 4 of you from Discord. Let's go.
Y'all hear the surge mom? I told her this morning. I said, listen, I'm going to have to crack down on y'all. But anyways, so we have, when Powell speaks for the US dollar, I'm just going to try to explain this the best way possible. Don't trade. Today's Thursday. He's going to create absolute chaos in the market. Just don't trade. It's not worth it. It's coming to the end of the week. You could have done all this amazing profit from Sunday to now. Powell speaks. You over leverage. Point. Done. You blew your surge account. You blew your live account. Whatever it is. Just don't do it. Start learning to watch. Like you can mark up your chart and just kind of do a guesstimation, on how the fundamentals will play out with the market. But I'm telling you, especially with a funded account, just don't do it. Fundamentals will wreck your account. Okay, so again, good morning. It's Thursday. So I'm going to just dive right in. Let me share my screen and go over what we went on Tuesday. Let me do this. Hopefully you guys can see this. And as you can see, every one of these trades, including this monster right here, I went over on these lives. This is why I try to encourage y'all to come in here. Not that I don't give signals, I don't give all that stuff, but I'm telling you what I'm getting into, what I see price going to, and why, what I look for on my entries, how I go through everything on every pair, how I've been trading for the last 8 years, what's created consistency and success for me. And the biggest thing for me that I try to explain to anybody and everybody, all of you that message me and personally DM me, simplicity is everything with trading. There is so much going on in the market that's enough to create enough chaos with your brain. We can only handle so much. We can only comprehend so much. Stop trying to overcomplicate things. Now, if you can see this, yes, and you're just trading or you're kind of a newbie, yes, this does look complicated, but you got to understand this is like multiple weeks of trades, multiple days. This is multiple analysis and stuff like that. So let me go over Tuesday. I went over why I was getting into the sell. Let me scale it down. I actually passed 2 surge challenges with this one trade. And I posted this on my Instagram, Imperial FX Academy, if you want to go look. And I think it's archived now. I might repost, but also posted it inside Surge Discord and my personal Discord to show you guys, like within the last 2 months, I've passed over 16 auditions trying to get 1.5 million funded, and then probably going to do a huge giveaway. I don't know. We'll talk about that later. But the biggest thing is when you are going for an audition, Surge Trader, whoever it is, obviously I'm partnered with Surge Trader, so I'm going to lift them up. It's who I'm partnered with. I love Surge. I love the company. Whatever you're doing, you have to understand when you are trading, you want to look for high probability trades with the lowest risk possible. So in anticipation for your patience on that trade, you can't say, oh, this looks like an amazing sell. I'm going to just jump right into it and I'm going to dump the account. I'm going to over leverage. I'm going to do all this craziness because you might get that one luck of the draw where you can flip an account. And I've seen it. I've seen multiple people through the support that you guys have flipped accounts, took 50,000 to 100,000 or 100,000 to 150, and then you blow it. Why? Because you get that super high. You have the highs and lows of the markets. You hit that super high and you're like, oh, I made it. I'm gonna just scale this up to craziness. Next trade, you wipe all your profits. The market knows this. It is designed to do this, and you guys don't understand that. You have to remember that in order to keep consistency and sustainability, you have got to create some type of trading plan. Even if you guys are like, oh, I hate planning too. I hate it. But when it comes to trading, there is no gray area. There's no ifs, ands, or buts. You either create a trading plan and you stick to it, or you will continually be buying challenges. You'll be continually trying to fund your accounts and stuff like that. So why not just try it for 1 month? 1 month. Try to focus on a plan. Focus on strict risk management to where you're doing, like for me, I do 40 pip stops to close to 200 to 300 pip reward. It's a simple no-brainer. I can lose almost 5 trades and one trade wipe out all my losses. 9 times out of 10, I can't remember when I've had 5 consecutive losses, because when I have a loss, I step back. I don't go back into the market trying to recover that loss for that day. I go into the next day. I have a completely different analysis, a completely different mindset. I'm not thinking about that loss, and I'm going into the market with a fresh mind. That's how it works. Excuse me. I'm so sorry. I'm drinking my energy drinks. But if you are, if you look back in your history, and I've seen a lot of you guys, like you sent me, or I made a post on Instagram about what's the average trades you guys take in a week. And some of y'all were messaging me like 140, 150 trades a week. That's insanity. The brokers love you guys. They absolutely love you guys, because they are not only slaughtering you on commissions, but they're slaughtering you on everything, because if you are trading that much, 9 times out of 10, you're losing. You're losing. Your revenge trading, regardless if your risk management's phenomenal. You're taking 150 trades a week. You are psycho. You're psycho. I can't even imagine taking that many trades in a week, even if I'm scalping. Like, again, create a trading plan. Have 5 to 20 max trades a week. Be careful with the fundamentals. Have your risk to reward already set in place. And then how you go about trading is what we're about to go over right now. So we are on gold. Gold is my baby. Gold is what has completely changed my life. I'm going to just do this right here, get a different pair so I don't have to get on my markups changed. But this was actually what we marked up, excuse me, the other day. I'm going to remove all drawings, and I'm going to go over how my strategy is for the last 7 years. Nothing changes. I just steadily just kind of tweaking things, learning a few things about my entries and stuff like that. But this is what I do. Last night I actually had dinner, taught 5 different people, and they were all, and I'm not bashing, let me say this, I'm not bashing, like, I think it's SMC or an ICT, stuff like that. I'm not bashing none of that stuff. I love, there's always going to be new information coming out, new knowledge, stuff like that. But again, let me explain this to you guys. When it comes to the market, when it comes to Forex, when it comes to commodities, when it comes to stocks, anything like that, there is enough chaos to where you don't want to overcomplicate things. You do not want to try to gain all this craziness of knowledge, all this craziness of terminology. It's insanity. Some of the guys that were with me last night at dinner, they had 3 to 4 notebooks of just insanity. And I was like, yeah, this stuff doesn't matter. They had 2 or 3 pages of how moving averages react and this and other. And you guys already know, if you're new to this, if this is the first time jumping on my live, every single indicator that is on TradingView, anything, it all lags. None of them are accurate. They were all created 20, 30 years ago for stock markets. They were not created for Forex. They were just improvised in, and then it looks cool. It kind of creates, it adds a few chapters to your story you're trying to tell yourself or convince yourself on why you want to trade, but they lag. So, and let me show you why. Perfect example. I could, using the famous moving averages crossed right here, and I apologize, I am going a little sideways. I'm going to go over how I trade, but I'm just trying to explain to you guys a little something about indicators. So I see the cross right here. This is where my entry would be. I get in a sell. This would be my stop, 40 pip stop, blah, 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 blah. And this is what I see YouTubers and Instagrammers, all the fake people. This is what they're saying. As soon as I seen that cross, I got in myself. And this was my entry. Well, let me explain something to you. It's impossible, because at current price, these moving averages aren't crossing. This is what current price looks like on every moving average right here. Now, obviously, people are going to say, oh, well, yeah, they're about to gold's on a bullish momentum. They're about to cross. Maybe. But as you can see right here, I don't see anywhere near each other. They're not even close to each other. So this doesn't tell you anything. And if you're trying to convince yourself of it, oh, well, it's telling me because I see it kind of creeping up. You know what could happen? This candle could close as a, whatever you guys want to call it, like a doji, and then price absolutely dump, because pal speaking. And it's going to be hilarious if that happens. I'll mark it up later, but I'm telling you, be cautious on indicators, because what you want to do is have the least amount of confirmations to get into a trade, because you don't want to have to if you have to convince yourself to get into a trade, then you shouldn't be trading. It's as simple as that. There is no other way to explain that. If you've got to create a story of why and convince yourself and have 20 different confirmations to get into a trade, 9 times out of 10, that's going to be a loss. Prove me wrong. All right, so yes, the indicators. We don't do it. We don't do Fibonacci's. We don't do moving averages. We don't do Ikimoto clouds, whatever you call the craziness. And again, I'll say this and then I'm done with all this, but there's so much new information and knowledge and terminology, liquid or order blocks and stuff like this. Let me explain one last thing to you guys. The markets are ran on algorithms, a software created by the banks to destroy retail traders. There is no such thing as, I'm not even going to go into the terminology. You guys you spend so much time trying to learn something based off an influencer and not a trader. Because I see these guys, they got 700 videos a month and however many views trying to get into trading, and every video is something new they're trying to teach. That's insanity. So call me by my bluff and test out this strategy I'm about to show you, and you see for yourself what you think. Simplicity is key. Simplicity brings consistency. Remember that. All right, let me take a drink, and then we're going to go into it. All right, let me remove drawings. First things first, top-down analysis. What we want to do, we hit the monthly, we go to our candles, we go to our line chart. We are on the monthly. We do not want to focus. We're just drawing. This is how I trade. I'm a swing trader. I only trade off levels. You only want to focus on the higher time frame, scaling down on current price action. So I don't care about price all the way over here in 2018 if it's almost 6,000 pips away from current price action. So I want to get my horizontal line. I'm going to put a line there. Why? Because it's a peak. Price touched, price touched, price touched. Again, we're on the monthly. We don't want to go crazy. You can come through. Boom. Bam. Bing. And y'all see, like, I'm not spending any time. I'm not spending any time. It takes me, bing, bang, boom. 5 minutes is what it takes to get my analysis. All right. Maybe one right there. And that's enough. That's enough. Here, I'll do one more. These are monthly levels. You can change the colors. You can put your text box, the text box right here, right click and go into settings and put your monthly levels. And that's enough. We don't want to create absolute chaos. We don't want to stress our brains. We don't want to stress our eyes. It's enough. It's stressful enough already. We go down to the weekly. And again, you can see this huge bullish momentum. This gives us the direction of the trend on the higher time frame. Regardless of what gold is doing right now, it doesn't matter how sideways it is, how this bearish, we are in a bullish market on gold. Do you see this? From here, from 1182 to almost 2000. Or it did hit 2000, didn't it? Yeah, 2040. So in order for gold to realistically become a downtrend, it has to break all these price actions or all this price zones. Doesn't mean that on the counter side, it is in a bearish momentum here. But in order for it to be a bearish trend on the higher time frame, you're talking about breaking all of this previous price points. All right, again, let me stay on track. This is the monthly. We have our zones. We can probably put one more right here. No, I'm sorry, I scaled down to the weekly point. And any other areas, we'll probably put one right there, but I'm not going to because it's already too much. Realistically, I could remove this because it's a little too far from current price. And boom, see how clean and clutter-free that is? Go down to the daily. Now we can kind of just get a little bit more precise do like that, only on current price. And then maybe one more right here. We're just doing peaks and valleys, and that's it. That looks good. We got a pretty clear indication of where prices flowed, where price is at, and where price potentially could be going. And now we're going to go to the 4 hour. And again, we're just doing this monthly, peaks and valleys, weekly, peaks and valleys close to current price, daily, same thing, just kind of scaling it down, getting a little bit more clear indication. And then all the way down to 4 hour. I don't like to put anything else past the 4 hour because it's going to be too much. Realistically, I just move this right here, and we have our story. We have our price played out. This is on the line chart. Now I'm going to switch over to candles, and look how. And you've seen, I don't care about wicks and bodies. I don't care about all the chaos. I don't care about all the craziness. I just put on peaks and valleys. I didn't look and try to get the very tip top of it. And look how price plays on these levels. Now, what I like to do is I've got the story. Now I want to look for areas of interest. Areas of interest is where price has played several times, moved sideways, back and forth. Support become resistance, resistance becomes support, and that is, you just go to the higher time frame a little bit. And okay, so I'm going to look. I'm going to use this little oval tool. I'm going to say, I'll put this here. Now, how many more touches do we have at this area? Well, we got this massive sideways moment here. All this crazy. I'm not even, well, here, I'll do it anyways. But realistically, I don't do this. I trade off my phone. I don't even use computers, only for these lives. Not that that's easier, but for me, that was the only way I knew how to trade. It was the only way I was working at the railroad. I didn't have any other way. I couldn't sit there and run around on a laptop or anything like that. Now, 1, 2, 3, 4, 5, 6. 6 different touches at 19, let's say 1955. So obviously, this price is pretty significant. Now, once you have that basically mapped out, let's go into what's happening for the current day. For today, we already know Powell's speaking at 2 p.m. So price could be sitting there playing around, bouncing back and forth. We'll go to current price and we're going to scale it down. Price touched, came back, touched, came back, touched, came through. Now it's touched again. So go to the smaller time frame. We see we're just trying to get a little bit clearer story of what's going on. All the way down to 15 minutes. All right, from what I see, price come through. This would be, let me remove this. Oh my Lord, I just removed all the drawings. Can I undo that? Thank you, Jesus. I'm sorry. Remember, I don't use these. Okay. What you can do is, I'm just going to put a little box here. And if you're wanting to trade this, if you're wanting to say, okay, what am I looking for? Well, we already know that price is kind of exhausted. You see prices just boom, 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 hit these zones on this area here. And I know, I apologize, guys. I'm kind of all over the place. I'm just giving you for where you scale down, top down analysis, all the way down to what you're trying to identify, what you're wanting to do, what kind of direction you want to take a trade. I already see prices come through this zone. As a swing trader, I only trade at these levels. So if I'm buying or selling, it's going to be here. If I'm buying or selling, it's going to be here. If I'm buying or selling, it's going to be here. Where I don't take trades is what I like to call the heart line. It is in the middle of these zones. You don't have to. You've seen I was scaling back and forth. It doesn't have to be perfect. I'm just looking for where I can touch multiple times, and that's in between levels. Now, if you're a scalper or intraday trader and you're looking for just a few quick hours or a quick in and out, this is where you would want to take trades, because 9 times out of 10, or not 9 times out of 10, if it's in midday and prices at this area, you could be looking for setups at these zones. Now, it doesn't mean that price can't completely go against the heart line. So what I mean is, if price is on a bullish momentum, again, heart line, up and down, sideways, up and down. No, there's no constants. If you're looking at somebody's heart monitor and it's flat, they're dead. Price is done. Heart monitor, the middle of the zones. You have resistance, support, heart lines in the middle. I'm just trying to reiterate why I call it a heart line. As price goes into these areas, I would say 9 times out of 10, when it hits the heart line, it immediately retraces after, but doesn't mean that you can immediately take a sell here, because what price can do, and as it's showing, I already see you have a pretty strong bullish momentum here. Price could just blast through. Let me do this right here. Price could break through, come back, and then retest that area. Or prices come up and then just rocket down based off the news at 2 p.m. Realistically, when fundamentals are coming out like what's going on now with Powell's speech, you're probably going to see, because gold is obviously the biggest, I don't know what you would say this, like the safe haven for the U.S. dollar. So if U.S. dollar is in chaos or whatever, gold's going to be where all the heavy wealth goes into investing into it. So you're probably going to see, when heavy fundamentals come in, price is just going to flow sideways, might just ping pong back and forth in between zones. That is why I say, when it's heavy fundamentals, probably best just to stay out of it. Just watch it. You can draw up your markups, but it's you'd rather be safe than sorry and just not get into it. I actually stayed up last night trading London session. Excuse me. I woke up at like 2:30 and traded till 4:30 this morning, just because I haven't traded London session in a while, and I love the movement. I'm getting older, so my sleep is very vital, obviously, as you can see. So if you're a London trader, I understand it is extremely hard. It wears your patience thin when you're trying to trade at those hours. But anyways, okay, so Heartline, fundamentals, take it easy. If you're an intraday trader or scalper, you want to go down the 5 to 15 minute time frame, and you can take reactions off this area. So if price is coming up and you're wanting to take a quick trade, go 5 to 15 minute and scalp it. Do a quick sell. If you see price do a candle like this right here, because this is normally how price reacts to these areas. If it's going to blast through this area and come back, you'll see one large bullish candle like this right here. Break through, and then price come back down, retest, and this is my strategy right here. So what I look for is, where's the arrow? I look for price to break, come back, and go. It's just called a break, hook, and go. Super simple strategy, and it's very easy to identify. You can almost identify on all the time frames. I like to look for it on the higher time frames because it gives you a little bit stronger, or it kind of signifies the strength of how that level is going to be. And what I mean by that, I've already showed you what it looks like. Price will do this. You'll see that bullish candle come up, price breaks and goes. You have an area of resistance, and if you've been watching my lives, you guys know this. You have an area of resistance, price breaks, hooks, and goes. Super simple, and I could show you right here. Break, hook, go. Go to the higher time frames. Remember, based only on levels, not the heart line. So right here, I wouldn't consider that a break, hook, and go, because it's in the middle, it's in the heart line, it's in between levels. It's not what we're looking for. Excuse me. Lord. I don't talk a lot, so when you're sitting there just constantly talking to yourself, this is what happens. All right. Break, hook, and goes. Break, hook, and go. Break, hook, and go. And it's almost like it's like a continuation of the trend. Break, hook, go. That wouldn't be valid. This wouldn't be valid only because this would wear your patience thin. Holding a trade sideways that far would be absolute chaos. 9 times out of 10, most aren't going to be able to hold a trade through all that noise. And then, and it's both ways. So if you're looking for sales, same thing. Price break, hooks, and goes. again, you can't really guesstimate how the market's going to flow. Not every trade is going to just be like this. As soon as price touches that area, just straight down, or on a buy straight up like that. Not every time. Not saying you can't catch these, because obviously if we would have went a little bit lower, this probably would have been, and you can just see how parallel and perpendicular the precision of the levels are right there. So that probably would have been another zone. You probably could have come down to that, and you can see it's pretty much spaced the same. So break, hook, go, heart line. Remember, as a swing trader, I wouldn't take this trade, but as you see the candle, boom, break, hook, go. And probably if you went on the smaller time frame, you could probably identify this a little bit. And I know I haven't even spoke about structure. What I mean by that is, like, you could have a double bottom here, and if you're not familiar with what a double bottom is, it's basically you have price come through and make a W, and then price comes back, retest that the neckline, and then boom. This is a bullish. This is basically just bullish structure. Or if you're looking for a bearish structure, you can have a double top where price is coming down. Oh, no, I'm sorry. I kind of went reverse. Price is coming up, hits an area of resistance, comes back, retouches, goes down, breaks the neckline, 9 times out of 10 retests that neckline, and then comes down. Lord. And this is a lot. This does still work with trading. Obviously, price structure is what we like to see. I base off current price action only. If I'm on a higher time frame and I'm looking for a swing and waiting and patience, I will look for a lot of this stuff, because you can easily identify these zones. Price comes up, couldn't break it, comes back and retouches, and then breaks through the neckline. This is the neckline right here of that double top. And then price breaks and then retest that. So this would be your break, hook, and go. And you can identify that this is where I mean by that. So you can see, let's just, we'll do this little number right here. Guys, I apologize that I'm sitting there coughing like crazy on the mic. But you have your double bottom where price broke, touched down, created a neckline right here. There's your neckline, come back, broke through, and then retested. So that would realistically be your break, hook, and go. If you were to look for a trade right here, let's just say you were literally, you had your entry at the neckline, put your 40 pip stop, 1919 to 1914. We'll just put it right there, 1914.96. Your stop is basically at the bottom shoulder of that double bottom. And then I normally go for 2 different zones. So we go 1, 2. So 40 pip stop from 1919 to let's just say 1956. That is over 400 pips. So you see how the risk to reward ratio is on swing trading. And I understand that's on the heart line. But this is where I just was saying, if I'm on the higher time frame looking for market structure and I see these, 9 times out of 10, it will play out. And you have so much more. My next lives, I'll probably go over a lot of bearish structure and bullish structure, because you have the, like, a triple top where price can literally, same thing as a double top, just price comes up one last time, then comes through, and then retest and blast. You have this is one of my favorite structures. You have this right here. And this is called a head and shoulders. You have your left shoulder, right shoulder, and your head. These market structures are still valid to this day. I don't know whoever blessed us with the knowledge of these structures, they still work 9 times out of 10. When price does this and you see this, you can almost gauge from the inside of that right shoulder to the top of the head is how far market's going to go. So if price was right here Well, I've basically got it. Price would realistically go to like right there on a bearish market structure. Now on a bullish, it's just it's the same thing but inverse. So you'd have a left shoulder, you'd have a head, and then the right shoulder, and then price would probably retest sometimes around there, and then point, blast up. These are market structures. Again, I didn't want to go through all of this. I just want to go over my strategy. And I know a lot of you guys are probably lost. You're probably like, oh, he's all over the place. It's okay. You will not get all this knowledge in one day, I can assure you. That's why I try to consistently show you my strategy, how clean I look for my levels. Again, me personally, I only take trades off these levels. So just because this looks like a great trade or good setup, I'm not going to take it, because I've known based off my consistency, it's better for me to, if I'm going to take a buy right here or sell, I've got my 40 pip stop. If it breaks this level and goes reverse against me, then there's either going to be a change of direction, change of momentum, and stuff like that. So just for me, it helps me, and it's just how my trading plan's been. It helps me to reduce the risk of my trades, and that's it. Not saying that you can't, take trades at the heart line. You can't take swing trades here, stuff like that. I'm just saying what works for me the best, what has created consistency and sustainability in the markets. Now, I'm going to try. I know I don't want to take all your time. It's been 30 minutes. So real quick, I'm going to remove all this. All right. We have price at this zone right here. This is what I used to do when I was scalping and intraday trading. In my early years, like in my first 2 years, I scaled an account, my 401k, from like 170 to over 400,000, just off this right here. I'm on the 4 hour. I created my zone. I see where price touched. This was support. Support's broke through. Support is now becoming resistance. I would scalp this right here. I'm going to go to the higher time frame. Look for previous price point. I see right here. So we have this zone. We have this zone. And we have that zone. So we see our ladder. If I was going to take a trade today, which I'm not, I just passed all them challenges, I am done. $40 pip stops, 1962 to 1966. Right there. I see price going to this zone. That is 1905. That's over 620 pips. Not saying it could happen, but with power speaking, you guys will see just the possibilities and capabilities of when that joker gets on the mic. Now, price could, I'm just trying to scale in price. I don't even know if you guys can see this. Going to the 15-minute time frame, we see price came through, rainbowed over, support failed. It's coming back to retest as a break, hook, and go. We will come back to this. I'll post on my Instagram how this trade played out. Again, I'm not taking this trade. I'm just saying if I was, what I'd be looking for, why I'd be looking for my entry. This is my entry. This does not look like 40 pips. Yeah, it does. Okay. Anyways, I hope you all have a wonderful day. I hope y'all had a wonderful trading week. Again, let me just go over this one more time.